What are the odds that you talked about inflation over Christmas? I've been witness to a ton of blame game conversations about how someone's vote enabled government spending that has led to inflation that now affects everyone. With rising costs and a stock market that seems to be falling daily, you may be wondering where you can invest your money in a time when your income isn't rising, but the price of goods and services is skyrocketing. Well, the market goes through cycles where some sectors perform better than others based on the market environment. We just had midterm elections here in the US, and historically the stock market outperforms for the 12 months after the election, with the S&P 500 rallying over 16% historically. But today's video is all about a sector that historically performs well during inflationary periods as well as after midterms. You'll want to watch this video all the way through, as I'll cover a brief history of consumer staple stocks during a recession, as well as my top 3 consumer staple stocks to add to your watch list. So hey, if this sounds like valuable information to you, please leave a like and subscribe to the channel if this is your first time here. Without further ado, let's jump into the stocks you should be investing in 2023. Consumer staple stocks are one of the best investments to make in our current inflationary environment. A consumer staple stock is a company that manufactures and sells basic staples that consumers need every day. Think food, beverages, and household items. Consumer staple stocks are typically a safe investment that investors can rely on. Now, I love history, and if you love investing, I suggest that you start getting interested in history too. Looking back at the history of consumer staple stocks performance, we can see that during the crash in 2008, consumer staple stocks actually performed better than any of the other sectors. Some consumer staples companies include General Mills, Procter & Gamble, Coca-Cola, and Walmart. Consumer staple stocks are considered to be the best investment you can have because of the stable nature of these companies. They have a strong infrastructure and a great ability to grow their market share, especially in an environment where people are less likely to spend on anything else but essentials like food and clothes. Hey, if you aren't convinced yet, here are 3 reasons why consumer staple stocks are recession resistant and will skyrocket in 2023. Consumer staple stocks have a stable demand and less volatility. They are products that are needed on a daily basis. These include items like food, water, personal care products, and etc. With these products, you can be sure that the demand for them will not fluctuate. They are also less volatile because these products are not perishable. This means that people will always want them. And even in a recession, consumer staple stocks do very well because people tend to reduce their other expenses just to buy necessities, which explains the drop in growth stocks like Meta, previously known as Facebook. Consumer staple stocks are considered to be a good investment because they have a history of rewarding shareholders. They're a good asset because they provide a stable and consistent return on investment. For example, Procter & Gamble as well as Hershey's have been in the industry for a century now, and investing in these companies is more rewarding than ever. They face worse economies than we see today, but the nature of their products allowed them not only to be successful during economic strength, but also during economic downturns. And if you think that during a recession, all companies cut or put out their dividends or put their dividends on hold, well, not Hershey's, for example, because after almost 30 years, this company never cut or put dividends on hold just to survive. Consumer staple stocks also has international exposure. These stocks are typically considered to be more stable than other market sectors because many companies in the sector have operations outside of the US as well. Take Philip Morris International, a company that operates almost everywhere except the United States. The company also owns 6 international cigarette brands, all included in the top 15. Now, if you were to wonder where to buy stocks, of course, you'll choose one that goes beyond the local market like Philip Morris, because a stock with an international presence is safer because it has a larger market share. All right, now for the good stuff, let's take a look at the top 3 companies that offer consumer staple stocks. First on the list is Walmart. It is hard to find a company that has been performing better than them in the last decade. This company has been around for decades and has been able to maintain its strong position in the market. When looking at the last 5 years specifically, Walmart has had a very strong performance, and its annual return has increased by almost an average of 12.5% over the last 5 years, and it has a market cap of $360 billion. Walmart has met the supply chain shortage through hiring more workers and increasing pay across the board. We've also seen a trend of high-income customers in the retail sector trading down from more expensive names to Walmart. With that, the company has been able to thrive in a notoriously difficult industry. This company is also going to continue to surprise investors as it continues to be one of the best performing stocks. My price target for Walmart is $165 in 6 months. P&G is one of the best consumer staple stocks. It is a conglomerate that sells products to customers primarily in the areas of fabrics, cleaning products, personal care, home care, and food. Its products are sold in over 150 countries, and it's the #1 global player in each country. Procter & Gamble has an average annualized return of 9.3% over the last 5 years and a market cap of $306 billion. Now, in the last quarter, sales increased by 7%. They're also one of my top dividend stocks and have a history of increasing dividend payouts over the last 50 years. They currently pay a dividend of 2.45%. I have a price target of $170 in 6 months. Nestle has a lot of brands that they own, but some of their most well-known brands include Nescafe, Skinny Cow, and Kit Kat. They even own a majority share of Gerber. Nestle stocks has done really well over the years, and in the last 3 years, it has outperformed other companies in the same sector with a net profit margin of 11.47% as of June 2022. They've also been able to grow their earnings per share at a rate of 26% increase compared to the year 2018. Nestle also has a nice dividend of just under 3%. I have a $143 price target in 6 months for the company. Now, it's no secret that inflation has been hitting the market hard this year. The consumer staples sector is becoming more important as consumers are becoming more conscious of their spending and focusing on spending on essentials. Hey, I hope you got some value out of this video. If you did, please make sure to leave a like and subscribe to the channel if this is your first time here. My name is Isaac, the personal finance nurse, and I'm your guy for all your personal finance and investing related needs. Hey, just as a reminder, make sure to always do your own research and due diligence on all the stocks that I mentioned here. Remember, just as you do some hardcore research on buying a house, investing in stocks is the same thing, so don't skimp on that research. Anyways, I can't wait to see you all in the next video. Peace.